Joseph Stiglitz. He's Nobel Prize-winning economist and author of a new book, The Great Divide. Professor, in the book you talk, of course, about inequality, and we're talking about austerity, you know, the difference, I guess, between the haves and the have-not. In Europe is something that resonates a lot, and we saw that in political elections recently. There's also, I guess, more, growing concern about shareholders, the fact that there's too much pressure on corporations to give back to shareholders instead of investing money in a more useful way. Do you think the current form of capitalism will survive?
No. I mean, I think it hasn't been working. You take the United States, that I know the data, and I talk, about in my book, The Great Divide. If you look at what's happening, say, since 1980, which is a third of a century, the bottom 90% have seen no increase in their income. This is not a successful model, where a majority of citizens are not getting any gains, stagnating, declining over a third of a century. That model is flawed. And one of the reasons is this focus on the short term. It's a short-term shareholder capitalism, you might call it. But I want to emphasize the short term. It's not just the question, if you were looking at the long-term interest, that might be one thing, but that's not what's going on. It's the next quarterly return. Last Tuesday, just a week ago, I'm chief economist at the Roosevelt Institute, and we had a big event in Washington where we talked about, presented a report called Rewriting the Rules. And we went through and showed how the rules of the game, the legal framework, had actually tilted the economy into the wrong direction.
I mean, you're talking about big companies, right? We just had a story about Carl Icahn asking a lot more money from Apple. The Apple CEO, Tim Cook, it talks about inequality a lot, right? So if you were in charge of Apple, would you do things differently?
Oh, very much so. I mean, if you look at Apple, say in the United States, here we're talking about one of the largest corporations, the largest capitalization in the United States, larger than General Motors or any of our companies ever was in terms of capitalization. It has about 50,000 employees, of which about 30,000 are low-paid retail workers. And when I say low-paid, they're roughly at the level of the minimum wage in Australia, above America's minimum wage, but our minimum wage is lower than it's been basically in almost a half a century. And they're not really investing in the country. They're not paying their social responsibility of even, they've been as clever in avoiding taxes as they have been in making attractive devices. And they're living off of investments by American people in terms of technology, who invented the internet, without which they could not exist. It was the U.S. government and other governments who did the basic research that led to the internet. So they're willing to take, but they're not to give back.
But Professor, the problem is it's a catch-22 because it's shareholder pressure, right? Maybe the CEO does want to give back more, but it's shareholder pressure. So again, how do you sever that link?
That has to do with the rules of the game. We've had a change in our legal structure over the last 35 years that has allowed for, and I would say, generated this kind of pressure. It used to be that corporations had a longer-term view of their workers, of the company, the survival of the company, and the growth. And it goes to the CEO pay. It goes to the whole gamut of regulations affecting how the corporate structure, which is so important, functions.
But can that only happen if you're not listed?
We can have a legal framework that goes beyond that. I mean, the real problem, of course, is if we start pushing pressure just on the listed companies, it will force them to delist, and then we have even more problems. But the corporate form is a man-made creation. We created the corporation with the rules about limited liability and so forth. That form, we can put other regulations on to make that form of a corporate, of our business entity work more for the citizens of the country, and whether it's UK or the United States.